Morning, guys. I've only got 3 emails to do, so I'll start off on those, and then we'll go into the charts. Last chance to hear my what are the dulcet tones? Right, thanks, mate. I did reply to this gentleman, but I just wanted to show everybody how it's done in terms of taking screenshots and doing your assessment. So he has a fib in from this move here on this is the Euro Kiwi. He should have got triggered into this. He's gone in for 1/4%, and he's got his lot size in here. He's got his entry in. His stop loss on 240 pips. Yeah, so he's worked that all out. Order ID number, perfect. The only thing I would suggest on this is if you right-click on your chart, you'll get an option to edit studies. If you go into edit studies, you can make this black so we can see what the currency pair actually is. And that's, if you got confused about that, I can show you. I just don't have that version of 10.6 on anymore. Anyway, phase 1 up, looking at that as a higher highs and higher lows. Yes, we're above the 200s. Yes, you got the support. Yes, you got horizontal. Yes, there's convergence. Yes, there's a buyer bar. There is resistance up here, but that's at least 2 to 1, don't I? Fib support, and there's no trend line, so that's all good. And I think you'd be at the money at the moment. It would have triggered you in, and you'd be at the money pretty much. So, well and done. I've got another couple ones to look at. What we have here is, there's divergence from cycle to cycle. I prefer to see the divergence out of this move, though. We don't have that yet. There is large resistance here with the high test bar on that. So you've got strong level of resistance. So swing a high. I don't know if that's on the checklist, but if you're adding it on the checklist, that's okay. Fib extension levels. Yes. Bearish chart pattern. Well, you could say there's a triple top here now, or I think there's 4 or 5 tops up here, or 4 at least. And that's a chart pattern. Seasonal bearish. Okay, 4 out of 6. Intending to take this trade on Monday if I see another seller bar. Fair enough. I'd like to. It is from cycle to cycle, and as I said, I prefer to see, like in this move here, you get that little divergence. Well, it wasn't divergence, but you get a little dip in this move. I'd like to see that on this move, to see the momentum from this low here to this up here, the momentum of this trend of this phase 1 actually dying out, not on the cycle. I think that you'll get a stronger reaction to price if that is there. Dollar yen, I think tried to have it. I'm not sure if it was there. Oh, wait up, where'd it go? Yeah, so there we've got Class C divergence on this move, okay? We certainly do have sellers now. Your risk reward on this might be a little tight. I'd check that before sort of looking at the trade, because you're targeting the 50 or at least around 100, I'd say it's going to be. So at this point you're looking at 160 pips back to 100. And your stop is, well, your stop would be about 150 or to 180 pips as well. So it's about 1 to 1, which is not ideal. Yes, it's a swing high. Yes, there's a horizontal resistance. You've got one there. You've got some sort of trend line. I don't know where that's come from, but I believe that you put the right one in. Fib extension. Yeah, I had to go to 2.618. Bearish price action. Yes, that's certainly there. Chart pattern. Yeah, seasonal. Okay. Yeah, the concern there is just your risk reward, but otherwise that is looking reasonably good. You're not online, so I guess you're going to get this in the recording version. Euro, one question was how to manage the euro-dollar trade that you're in now. initial stop loss was down there. Your stop is now there, so you got your stop in the right place. Resume your entry was over here on this day, across there, and you moved your stop there. That's fabulous. Look, you do have two buyer bars, so you've got a reason to move your stop a bit closer if you want to. I presume that's what you also mean by these two little green arrows. Obviously, Draghi didn't move rates. He did say that he's still going to keep the tools at his disposal. We have resistance up here. There's no sign of this momentum being at exhaustion yet. So theoretically, this is it has broken the head and shoulder pattern. How to manage it over non-farm payrolls? I would suggest you've reduced your risk by at least half. If your stop was there, you've gone a little more than half. I think at this stage that's the best you can do. The volatility around non-farm payrolls, they had, if you look at the concern I've got, right, is that last night they, 30,000 less people decided to ask for handouts, and previously this here we had 33,000 people, more jobs added. So the 180, well, that's different. There's some calling 181, there's some calling 183. But I think anything under 180, if it's 179 or lower, you'll see the US dollar continue to weaken. If it's sort of 185 or 200, sort of 190 and higher, I'd say the US dollar will get stronger, and therefore your stop loss may get taken out. Even here, there's a possibility of that. We'll certainly come back and test this level. If you're concerned about it, I would look to say maybe take a bit of the lock a bit of the profit in, leave your stop there where it's at, but sell a part of the position. What do you got? 0.09, so maybe sell 0.03 or 0.04 of your trade to lock a bit of that profit in, and see how the rest of it goes. Otherwise, it's a random market at the moment in the US dollar, so there could be a bit of volatility on it. If it comes out on the nose, then you'll be fine, I would suggest. Or if it comes underneath the number, then you also will be fine. However, as I said, we've got some pretty good figures indicating that the number may be stronger than 180, which would then put the market into tapering. With the concept of tapering is going to commence on the December 19 meeting, and that would bring a stronger US dollar. Okay, so that's it for the emails. Seriously. Come back here. Okay, let's start at the top. Aussie dollar. We have clear divergence. We have an inside buyer bar. So we're coming back up to 91, and this key level of 91.38, which is, as we can see, is a 38% retracement from 2008-2011. There is divergence there. With non-farm payrolls, I'd wait till Monday before looking to take this long again. We are in an extensions area. The only thing with waiting till Monday is it may ruin your risk reward. Aussie CAD, literally I was trying to sell this underneath this bar. It was 1 pip away from getting taken out. It's now just sort of fart-arsing about. It's an inside low test bar, and I've got no interest in shorting it, and I'm not yet ready to consider this as a long trade until I see a cycle back above the 50 EMA It's a phase one, a cycle above like that, above the 50 EMA before I start taking this long. So yeah, not wanting to short it and not wanting to long it. The CAD did get some strength overnight, but obviously not strong enough to push this currency pair lower. So it's a matter of sitting. We'll stay out of that thing anyway. Aussie Swiss, it's gone beyond it now. We no longer have divergence here. We're way out west, where the rain don't fall. There's a bit of support around here at 81. Just looking at the weekly. Just looking at the weekly chart. We have about, there's a minor support level, a major support level there at 81 area. Let me drag one of these ones down there and put it there. And now come to weekly and I can show you that across here. Yeah, no divergence would keep me out of that market, but it's sort of getting well into exhaustion zone. Aussie yen, there's divergence in the 4 hour. Mate, there might be divergence on the 4 hour. I'm not trading when both are in phase two though, okay? There's no way I'm going to trade the 4 hour phase two when the daily's still in phase one. Okay, I'll trade the 4 hour when the daily's finishing phase two, but not when it's about to start phase two. No way I'm trading 4 hour phase two at this stage. Well, it's under support there. It was looking reasonable. Well, it wasn't looking reasonable. It's just the 200. You can't even see it. It's on this red line. It's that flat. Oh, there's nothing there that I'd like to look at. If anyone wants to look at it, then let me know. But I'll move on. $1.10 is a nice level in the Aussie. Crikey, it even made the news last night. I actually did watch Channel 7 News for the first time in a long time, and I realised why I don't watch that kind of crap. But they did talk about the Kiwi making parity, which is obviously one for one. That's what parity means. There is divergence there. One being $1.10 is a key level on the weekly. It's another 1,000 pips to get to parity. Would have been a good sell back in, when were we looking at? I think we're looking at it back here, in here as well. Anyway, no sign of buying intention yet, even though there is divergence. I'll stay away from that for this time being. You'd want to see Class A divergence, which this is Class A divergence. You want to see Class A divergence and a strong buying bar. And given the strength of this trend, I'd like to see probably more than just, I'd like to see a couple of days of 2 buying bars. Some good stuff on commercial TV. Cricket. What's cricket? What is that? Aussie Sing. Also has divergence, a lower high, lower low, but a buyer bar, like the Aussie dollar. It's is that a strong horizontal? Well, it's had a couple of touches on the weekly. This one here is stronger though. I'd like to see back above that before taking it, and then your risk reward is ruined. So that's not a good one either. CAD is rolled over, but with no diversion. Cricket. That's an excuse to drink for 6 hours a day if you don't have a life. Okay. Is that thing that goes for 5 days? So you got 5 days of drinking. That's the excuse. Yeah. Okay. I hope you guys know I'm jesting. Has rolled over with no divergence on RSI, and some people say, well, there is divergence there because we have, whilst this was going up, at the same time this was going down. You guys can see that in stochastic. But I prefer to see the shift over here, something similar along the lines of that, where you got higher highs and clearly lower highs. Yes, it's a ring high, and yes, it's over. It is overdone, but yeah. Not without the divergence, I'd be unwilling to take it, and you've got non-farm payrolls tonight, so I'd be leaving it alone. This one, in the blue box, in the blue room, we've finally got into there. Sellers still dominating though. I think the CAD, I think this one was judging by the Aussie Swiss, that the Swissy strength rather than continue CAD weakness. So you've got 2 seller bars. You could have your stop above this now. Well, it should be above that horizontal there, that worst case scenario. And it's still running. It is well overdone, and it'll probably turn in the next couple of days, but we need to wait and see that first. Sorry. Okay. Where was I? CAD Swiss. CAD Yen. Range traded. There was divergence there. I'm not sure. I think a couple of people took it. Yesterday's bar is an inside seller bar. I do see a bit of yen strength across the board. Aussie yen you saw. I'm about to go to Swissy yen, which you don't see the strength in, but the pound yen and the dollar yen there, it certainly is. If you're in this, there's no reason to be moving your stop just yet. You'll be just in the money, and you'll be sort of sitting tight, waiting for it to cross the target or cross the range. If you're not in it, well, I think you missed the boat. Yep. If you're not in it, stay out of it. But Swissy broke through 90. Sort of pulled up at this. I think this is dollar Swiss, so it's Swissy strength here. Getting overcooked. I have this from I have this level from weekly. There's a double bottom back in 2012. You can see that there. That's it there. So we're back there now, or getting close to it. Has gone through 90. So those of you who did take this short off this ring high, congratulations. I wonder if anybody did actually take that short with. Let me have a look at the book. Dollar Swiss, yeah, some of you did. Well done. Good stuff. Okay, Swiss yen. Said the Swiss is quite strong at the moment. The yen is also reasonably strong as well, so it's just a bit of a battle at the moment. We are in overextension. I'd like to get short yen at on any possible pullbacks. There's no pullback at this stage on this, and there's no sign of real divergence at this point. So there's no opportunity there. Euro dollar, as we sort of covered this earlier, if you did take this, then you need to have your stop underneath that. This non-farm's out tonight. If you're not in it, you certainly have missed the boat, and you should not be looking at this until Monday. Still some, you might be able to get it in on the 4 hour if you're allowed to trade 4 hour charts. Clear divergence there. Any horizontal? No, we've gone through $1.50 and now we're holding above it. There is a bit of 52.64. I've got, let me just show you that. You can see that there's a high just there on that week in 2010. This is a weekly chart, and it's also the same high as that fib, which is only 150 pips away. But you know, the average range on this thing is probably, average range is 130 at this stage, so it could do that in a day easily. It's another little high test up to that level, and you'd have your horizontal, you'd have your extensions, you'd have your divergence. Right now, nothing. Same with this one, nothing. And you'd not be looking at anything just yet. Just poked its nose into the sell zone, but the sellers are not yet evident. Euro Swiss is sort of trying to make a breakdown. Would you sell it? No. We know that there's a floor on this. You wouldn't be selling it, but you could look to buy it if it sets up. Euro, despite the Code Swiss. So glad I got taken out by 1.7 pips. Swiss yen, long since the 12th of November and well in profit. Not sure where my stop should be. I do not want to get too close in case it continues long. Currently 112.10. Well, it looks like there's a little swing low there. Might want to check in MetaTrader. So you could probably bring it up a couple of maybe 50 pips or so. Or you leave it underneath this low here, or wherever you've got it, 112. Take a bit of, reduce your exposure by taking a bit of profit off the trade and leave the balance to run. A nice bar on the euro pound. Brings us back into the mess of range trading, and I really can't do that successfully, it seems. Overextended bar now, so you can't really trade from that. If this trend is now locked in back into a downtrend, and you'd be looking for a test of the 50 in days to come. With the pound, sort of, they're looking to reduce their quantity of easing, and the euro is still sort of got their foot on the pedal in quantity of easing. You'd think this would be going the other way. The pound getting stronger and the euro getting weaker, but at this point there's no sign of that just yet. Euro's at 112.75. Yep, that's good, Duncan. Here we had a lower high, lower low, then it's an inside, pretty much a doji bar. Severe lack of interest in the market, hanging on to that horizontal level I have there. You love it when you're right and you're not on it. 140. I was calling 141 actually. 80 pips away from it. Again, I'd be looking to buy dips on this if it gives you an opportunity. If you're in it, then your stops should be underneath that. If you're not in it, then there's nothing for you. I looked at this earlier, and that some people are trading this as a trend with higher highs and higher lows. We've got a higher up. Yep. And I don't blame you for doing that. Is there an entry on the 4 hour for those who are trading or can trade the 4 hour? Let's have a look at the real system. This bar's sort of only an hour and a half old, so I don't see anything in that yet. Nasty high test, which would have got everybody in, but it's looking reasonable at this point in time. Obviously, if you're in it, then your stop would still be under there. If you're not in it, you can't exactly trade it now. I know it's at the price that you should be trading at, so technically you might be able to, but you're coming to the party late. Johnny come lately. And I'd turn a blind eye to that. If it was successful. If it wasn't, then I'd be most upset that you took the trade. Okay. Euro, Kiwi, cable. It's not Class C, it's actually a higher high, so there was no real divergence, and 163 was our major resistance and is now becoming support. I was expecting a bit of a pullback to for this pair. It might be 62.50 before going on. I'm reading reports of 165 and 170 as targets for this, and I'd have to agree with them. At least sort of the next horizontal resistance is around here at 66. That's somewhere I'd be looking at. But now that we're getting that rollover, I'd be looking to set it up for a long trade and saying, well, somewhere in here is where I'd want to get long. That's where I'd be looking to get long up. And the same with the, let me just put that on the Swissy yen. It did have a higher low. It is still going. But with that horizontal there, it looks good to be getting long in here. Euro yen similarly, you'll be looking to get Not that I'm prepared to sell it, but you'll be looking to get long around there somewhere. It's that horizontal there. Pound Aussie. Again, there's Class C diversion across here. Massive resistance there at 82 with our 2. We get a test of it. We get an inside seller bar. If this bar is a lower high, lower low, then you'll be looking at a potential trade on this for Monday. Keeping an eye on your risk reward. Obviously, you're looking at about 350 pips versus 500 odd, so it's not an ideal risk reward. Pound CAD. Also, well, it has had the seller bar. You could be looking at this today, but there is their divergence. Not on your RSI, but there is on this stochastic here. Yeah. So your risk reward on this, if you're looking at it, you're looking 260 pips to 400 pips, so it's about 1 to 1.8 or 1.7. Again, not ideal, and I prefer to be long this. I prefer to be long from around here somewhere. And if I take this off and put this on, yeah. So in there somewhere is where I'd look to get long. Okay. Euro pound. Yeah, gee, I'm glad I got stopped out. Yay. Heading back to 144. Anyone take this short? Oh, I don't have to ask you. I can see. One person took this short. Well done to you, sir. Do you have a target on it? You don't have a target on it. Okay. Pound yen. Also, little divergence. Well, there's no divergence. There was in the last 3 bars if you look at that peak in the blue. I mean, that's really stretching it. You know, what you want to see is like divergence across here, like that. You know, Class C there, or Class A there. However, if you're looking back, well, looking at the 50, you might leave the phase 2 alone and be looking to get this long in sometime next week, in around there. Pound Kiwi, range bound, $2 proved too much. Is rather messy, and there's quite a few of you are short this as a range. It was borderline divergence there. Stochastic was not divergent. If you're not in this, well then you've kind of missed the ride. Yen. there was Class C divergence there. As I said to the guys this morning, is that, or at the start of the webinar, is your risk reward on this is not ideal. Okay, so you're looking at 175 pips versus 170 pips. So that's 1 to 1, which is not great. Love to get long this. I've had this blue box sitting here for weeks now, months, and that's where I'd be taking this up to 105 and 110, which is the call. So I'll be keeping a keen eye on that for non-farm payrolls tonight and seeing where I should take that. Kiwi. Pound Swiss, when looking at RSI divergence, would you compare to the 7th of November high? Pound Swiss. You could, right? But ideally you want to see this movement running out of pressure, because it's this movement that's driving price. Yeah. But you could then argue, well, okay, well, we've been in that movement since, here. So, yes, there is divergence. Yeah. But you want to be seeing it like this, where you get a high there and then another high. That's the ideal Class A divergence. Yeah. And it's running out of that move rather than looking at this to this. Yeah. Does that make sense? So you're not looking from here to here. You're looking at this move running out, and that's what you see on this high, from that high to that high. Over here, you'd have to argue then that's the move which started on the 1st of November, rather than the one here that started on the 27th. Kiwi is just a mess. Literally, dog's breakfast. Yeah. 1.5 pips I was safe by not getting short. I turned around pretty quickly too. Got down there and turned around in 2 hours. And some of you did take that short. Well, you might be all right. I am bearish the Kiwi. I don't see anything there now. This is a low test bar. Yeah. So I don't see much. If the non-farms come out strong, then obviously you're going to have this, and you'll be saved in your trade. But at this point, it's not looking all that good. And this one again, there's nothing there that I'd be interested in at this point. Sing is trying to do a cycle above the 50. We've had divergence across here. So I'd expect this to pull back to some sort of support level, which you might find around here. Or maybe it's found the support just there, which is on the weekly reasonable. Whereas this one down here is reasonably weak. Again, I'd stay out of it until because of the non-farm payrolls. So here's cycle to cycle. We are lower, but you want to be seeing this phase one, the market pressure coming out of it there across here. So over here, just like we did on this one, it wasn't divergence, but you can see what you're hoping to see. Yeah, you're wanting to see that run out. Chart pattern this is what I was talking about. Is it's a previous double top. So That is a high test bar. Fooling around with it. We'll see what time will tell. If you were trading this, you had 1-2 bars and you got a test bar off a resistance, you'd be having your stop underneath that if you're in it. Rightio. And that's it for okay, with non-farm payrolls broken into profit with the euro. I've explained how to manage the euro if you're on it, and if you're short the pound since Wednesday, that was a bit of touch and go to get short that. You'd like to see it under 63, which is this low. Yeah, I'd like to see it underneath that. How to manage it, mate? You're in it. You're going to have to do the best you can, which is probably leave your stop above here at this stage. You were willing to risk 0.5% or whatever on the trade, so there's not enough movement or not enough distance between price and your entry to sort of to get move your stop or any reason to move your stop at this point. So I'd be just leaving them. If you are concerned, then take some risk off the table by reducing your exposure. Okay, I may have one on Monday. I'll check with Danielle. I think there's a course on Monday. If there's not, I will be doing it on Monday morning. When I logged in this into the webinar things, I might say I have one on Monday, but I think there's a course on Monday. I'm not sure. So I'll check with Danielle and I'll let you guys know when I email the YouTube link out. Pound CAD is set up now, but it's not sent before Monday, is it? Well, the Pound CAD, yeah, there's no direct news on the Pound CAD. However, the Pound CAD, I didn't, to get the divergence, you had to go into stochastics. Yep. And say, well, there's your divergence across there. There's no divergence in RSI. So yeah, you could look at the Pound CAD and you'd be sort of targeting that area there. Your risk reward, I think, is about 1.7. I think you should go to Bali for end of season break. Thanks, mate. If I don't talk to you Monday, you'll have a healthy and wealthy and Merry Christmas, and I'll be back on January. If I do talk to you on your Monday, then I'll repeat that message on Monday. Otherwise, safe and happy trading. If you need me, I'll be on email. Okay. And thank you for listening. Thanks for a great year. It's been fun, interesting, and a pleasure. So, good night and good luck.